Hello friends, I want to dedicate this separate lesson to prop trading. I often receive questions from users about whether the pumping station can be used for trading on prop firm platforms frequently. I will answer that it is possible, even necessary, because this strategy is universal and can be adapted to any style, including prop trading. Now I will explain what you need to do to meet the basic requirements of prop firms, how you can overcome challenges, how you can become a funded trader, and what you need to do for that. So, let's get started.
So, guys, when it comes to prop trading, this is a very popular tool for financial growth. How does it work? Let's say you know how to trade. I hope you will learn to trade using the pumping station system and you will be able to trade on the platforms of prop firms. How does this happen? The prop firm initially evaluates your abilities within the framework of a challenge, where you demonstrate clearly and effectively, in a manner that clearly shows that you can trade without violating the established rules, and consistently. These rules may typically differ significantly, but all prop firms, without exception, have a fundamental rule regarding maximum trading drawdown. It is important to note that certain brokers prohibit carrying specific types of financial market trading positions over the weekend due to various reasons such as market volatility and risk management. Some even prohibit carrying trading positions over rollover. Some prohibit the use of trading bots. Some force the use of stop loss and so on and so forth, perhaps. Now I will go through all of this, one by one, and tell you how to use the pumping station under various conditions of your brokerage firms. More precisely, your prop firms. As for prop firms, you essentially earn on their platforms. This basically relates to the question of how one makes money through prop trading. With the help of the pumping station, you will learn to achieve stable profits. You go to a prop firm where you take on this challenge that has different rules. After that, you are given capital to trade and you keep 80%, though this depends on the conditions of the prop firm. It can be 80% or 90%, varying by firm. Of course, you pay money to take the challenge, and that is how the prop firm makes its profit. Well, of course, as you might expect, let's take a closer look at it now. So now I will explain to you how to trade on prop firm platforms in order to make money. So, when it comes to trading platforms, the maximum number of prop firms offer traders MT4 or MT5. It's up to you. I recommend starting with the MT5 platform. It is a next generation platform that will continue to operate for at least the next 10 years. MT4 is being used less and less now, so learn to trade on MT5. Basically, it's almost the same as MT4. And yet, this new platform is more technological. Although I use MT4 more, as I mentioned earlier, I'm kind of an old timer already. I have over 20 years of experience in trading. I'm more accustomed to the MT4 platforms. So, the second point, in order to comply with the rules regarding maximum trading drawdown or maximum daily trading drawdown, which are crucial for maintaining the integrity and stability of your trading account, you need to set the trading lot size in such a way that it corresponds to a size of 0.01 when you apply the utility. These rules are designed to prevent excessive losses that could jeopardize your trading capital. For instance, if the drawdown exceeds a certain percentage, it could trigger a margin call. Therefore, it is essential to carefully calculate and adjust your lot size to ensure it aligns with these regulations. A fee is applied to every 2,000 units of your currency. This means that for each increment of 2,000 units, a charge will be imposed, ensuring the cost is proportional to the amount of currency being handled. To ensure you correctly understand what I'm saying, let's say you have 2,000 in your account, then the trading lot should be 0.01.
4,002, yes, we put 002 here. If 6,000, then 003. If 8,000, then 004. If 1,000, then 005. So if you watched my video lesson on money management, remember that I recommend setting 0.0.1 for every 1,000 units of deposit. But prop trading, in general, requires minimal trading drawdown or overall. And here,
In order to meet these strict conditions, prop firms must reduce the trading lot. Make it approximately half of the basic standards that I recommend. Thus, if beginner prop traders usually take the smallest account for a challenge, which is approximately 10,000, you will need to set a trading lot of approximately 0.05 for it. This is how you very simply and easily set it up in the utility. Use it, and it will be set by default in the utility as the trading lot, very effectively. In essence, you receive buy-sell signals and will execute trades with this lot. In summary, thus, this provides answers to two questions: how to trade effectively so that the maximum possible daily drawdown does not exceed 4%, and the maximum overall drawdown on your deposit on your account in proprietary trading does not exceed 7%, while for some prop firms it is strictly 10%. This will be fine for you. It will suit you, what I just told you. So, the second question is specifically about the use of trading robots and expert advisors in particular. If your prop firm, which is a proprietary trading firm that provides traders with capital to trade, prohibits the use of expert advisors, then you cannot use the utility. This is because the functions for trading through buttons, as well as the trailing stop and automatic trade closing features, will be considered as automated trading by your prop firm. Automated trading, in this context, refers to any trading activity that is executed by a computer program or algorithm without direct human intervention. For example, using a script to automatically place trades or adjust stop-loss levels would fall under this category and could lead to violations of the firm's policies. In other words, it will say that it is not you trading, but some trading robot. And it will be right, because hardware trading is being used here. A trade is opened through the buy-sell function. To open it correctly and not violate the rules of such a firm, you need to use these buttons. Just remove the utility. As for the size of the trading lot, adjust it here. That's it. But the utility helps you close trades. What to do when you don't have the utility? In the first lessons I told you, I showed you, and now I will show you. Let's say you have here, for instance. For example, 0.5. We'll assume you have approximately 10,000. Right now, currently, our deposit shows 10,000. We will remove this utility in this manner, like this, and trade only using the keys. We enter a trade on buy, carefully, like this, and on sell, precisely like this. Then what we do is grab the order with caution, with the mouse cursor, and set the take profit at the red level with accuracy. Thus, when the line, specifically the trend line, the red line, which is the red trend line, shifts due to market changes or fluctuations, you need to move your take profit level further along with that line. This adjustment is crucial to ensure that your trading strategy remains effective and aligned with the current market conditions. Here it will go further like this. You will need to shift and close at this line under any circumstances. Secondly, you can also utilize the smart close function and trade on other time frames, such as, for example, on the M30 time frame. Additionally, you can explore more options. Here is this time frame. Next, you will simply shift along the red line on M30. Switch to H1. If you can't close at the red line on M30, you will be able to do it on H1. If it doesn't work on H1, you see the level here is much higher. You can switch to this one. If it doesn't work on H1, then set the closing level on H4. Set the trailing stop carefully at this level and close on H4. But this will be the extreme level, which is crucial. If you are unable to close at the extreme on H4, at this line, then do not switch to D1. In principle, you can absolutely perform all the utility functions manually, if necessary. The only difficulty you will potentially face here is slightly dragging the take profit level. You see how the level on H4 is right here. Look,
we have just placed it here. And on M15, where we start trading, the take profit is here, while on H4, it is all the way over here. So if we can't close on M15, then we'll move it to M30, then to H1. Then H4, and here is where the line will be at that moment, let's say here, but in any case, it will be higher than this, and this will bring you profit in most cases. Therefore, I say that if you want the most profitable trading, use the smart closing function, that is, intelligent closing. And then for smart closing, you can practically not adjust the profit factor at all, because here it is, at 135, which is generally quite sufficient for trading excellently. As for trading, I told you about money management, and I explained the use and non-use of trading bots. If bots can be used, you can apply them here. If you look at the conditions of the prop firm, if using expert advisors is allowed, then of course use the pumping utility, and this will save you a lot of time. It will also help you set the trailing stop correctly with the smart closing function. If you use smart closing, let's go back to the lesson on how to use the utility. Here, you set it to only profit for 4 hours and apply the correct trading lot size. This way, you use the utility and trade without problems. The utility shows that it will close and make a take profit at this level when the price reaches the red line, automatically closing the trade. If your broker, or more precisely the prop firm, actually requires you to use take profit and stop loss orders, then duplicate what concerns take profit. You will in fact need to place a take profit order at some distance. It doesn't have to be moved around. Just let it be static. Placing it once is sufficient for that order. As for the stop loss, if the proprietary trading firm does not specify what size the stop loss should be, then it is advisable to set it at approximately a distance of 3,000 points. This distance is generally considered a safe buffer to protect against unexpected market fluctuations. Setting a stop loss is crucial as it helps in managing risk and preventing significant losses in trading. So let's say this, 1600, you can pull it like this to set the stop loss at the right distance. Just grab it with the cursor and stretch or compress the chart like this. Here, for example, you can just see the size here. If the prop firm does not specify what the stop loss should be, set it to 3,000. Thus, it should be formal, but the price never touched it. The utility will close this trade as needed. If perhaps, maybe, possibly, certainly, the prop firm requires you to set a stop loss as a percentage of your deposit, so as to ensure that the risk does not exceed a certain level for each trade. Use the calculator for stop loss on the website of this prop firm in order to safely determine how many pips that will be. Use this stop loss or use the stop loss that I showed you for calculating stop losses and take profits based on volatility levels on the website investing.com. Refer back to this lesson regarding volatility, calculate the volatility, and determine what the volatility will be for this asset, for example. Here, the euro against USD. Look at this asset. There will be about 90 points as far as I remember. And here, with the help, you see I set almost 90, 97 with this service. You can determine the size of the stop loss required by the prop firm. If the prop firm does not require it, then do not use stop loss and take profit. Use a tool that will correctly set your virtual take profits and help you lock in profits and losses at the right moments, such as and effectively in a timely manner. For instance, you can lock in a profit right here, right at this very local maximum before any potential pullback occurs. It might have gone up further, but it is certainly not guaranteed that there would be any upward movement. If your proprietary trading firm has requirements that are unattainable,
You must first and foremost understand what is truly feasible for you and what is not when you initially register an account with the proprietary trading firm and subsequently purchase a challenge. Because there are indeed many prop firms that simply collect your fees for participating in challenges, and they set conditions that are impossible to meet. And considering that you will not be earning, will never be able to earn, or only in very exceptional cases, and very few traders make a profit, such prop firms feel quite comfortable. They make a profit and never share their profits with traders. And you need to calculate such a prop firm like at the first stage. The first thing that should raise your suspicion is that the prop firm does not allow you to use trading robots. That is, as I mentioned earlier, I informed you that in this case you will have to slightly move the take profit levels carefully along this red line. Why do you need conditions if there are many prop firms? As far as I remember, I personally counted about 20 or let's say around 30 more or less popular prop firms. And if we consider all of them, including the unpopular ones, there are about 50. For example, there are 50 prop firms. Choose the one where expert dictionaries can be used. There are about half of them, which means 25. You will definitely find what you need. Second, if a prop firm prohibits carrying trades over the weekend and through rollover, meaning only allowing trading within a single day, specifically strict intraday trading, and you cannot carry over through rollover, forget about such a prop firm. It is simply an impossible task. Well, let's say I made a buy trade here. The price is fluctuating up and down, and then it finally reaches my virtual level of 100 pips at the level of this red line. But when this will happen, whether today, during the day, or tomorrow, I don't know. However, it turns out that at the moment when I need to close this trade with a profit, the broker does not allow you to wait that long. He says you made a buy trade and close it within the day today. It doesn't matter if you made a profit or a loss. The main thing is that you closed and did not violate our rules. Then, based on the results of your trading, you can see how much you earned. It turns out that you haven't earned anything because you were trying to follow the broker's silly rules, which were made to ensure that you lose and cannot take your profits. So, first, we exclude from the list of prop firms and brokers that prohibit automated trading, meaning the use of expert advisors. This will automatically ban the use of pumping utilities, which is bad. You will spend a lot of time and effort trying to conduct manual trading of stop orders. And secondly, you should by no means choose a broker that prohibits carrying trading positions over the weekend and through rollover. That is, over the weekends and through the change of days at midnight, when one day transitions into the next day. So, another interesting option that awaits you on the prop firm platforms, which are specialized trading environments where traders can access capital and resources, is the use of multiple trades on one currency. This strategy, known as averaging down, involves increasing the size of a position as the price moves against the trader, thereby lowering the average entry price. Additionally, the use of martingale grids, a method where traders double their position size after a loss in hopes of recovering, is also available. If martingale grids are prohibited, then you will only use basic functions, a basic strategy, or the smart close strategy, like this. In general, other strategies regarding averaging down are not needed. You also don't need averaging down in general, even if it is allowed, because it increases trading drawdown. It is impossible to trade consistently with a trading drawdown of no more than 4% on a deposit of $10,000. Even if we set the trading lot to 0.01, this is incredible, especially if the leverage in prop firm is 1 to 100 or 1 to 200. This is impossible. Impossible. You will constantly violate the rules regarding maximum trading drawdown and will continuously fail the challenges and not receive funding from the prop firm. So forget about averaging down altogether and about martingale as well, even if it is allowed by the broker. The broker specifically allows averaging down so that you violate the maximum drawdown rules. Trade with a basic strategy using one trade or one trade on the smart close strategy, and then you will be trading with a maximum drawdown of up to 4%. Maximum daily and account drawdown up to approximately 7%. You will, generally speaking, earn an adequate enough profitability of 5% trigger, 5% target. You will earn this within approximately about a week or so, possibly a week and a half. Then you will move to 10% for another week, or perhaps even more, and so on. Over the course of a year, with an absolute maximum drawdown of about 4 to 5%, you could earn around 300 to 400, sometimes even 500% in total. For example, if you started with a capital of 100,000 and you take 80% of the profits for yourself, you will be earning quite a considerably substantial amount. And the pumping station, for which you paid just a little to learn this strategy, will bring you huge capital. As you can clearly see, the buy trade I made increased significantly, and soon it will close profits. Basically, it doesn't matter because we are just learning right now. And one more important point. This is trading on a single asset. And yes, another important point is trading without correlation between traders' accounts. Correlation usually occurs when the broker monitors to ensure that traders do not use the same strategies or the same trading robots. Let's say I am using a trading robot and someone bought the same trading robot from me, and we are both trading with identical robots on the platform of the same prop firm. The prop firm says you have absolutely precisely the same results. I can see it. Your trades match. And anyone who started using the strategy after this trading bot, their trading account does not participate in the challenge and does not receive funding. It is essentially simply closed. That's it, in any way or benefit from the challenge. Similarly, even if you trade in a similar manner by hand at the well-known pumping station and another individual trades exactly like you, they could follow the same principle. As for the pumping station, it is excluded here. Firstly, each person will choose a different number of assets. Then, each person optimizes their portfolio through different presets. The trades will differ slightly from each other in their characteristics. Each person will have a different size of trading lot, different money management, slightly different, because they will choose different capital sizes, and most significantly, and importantly, every person, regarding the pumping station, the issue of correlation is generally excluded because, in fact, all the people who trade manually do so in their own unique ways. For example, you will choose different currency pairs for your portfolio, and you will optimize your strategy differently for each currency pair using the presets that you select from the drop-down menu. Thus, indeed, the correlation between the results of different traders will be very, very minimal. Therefore, you will easily meet this contest parameter. It is a requirement of the rules. Thus, regarding prop trading, the pumping station is an excellent system that is ideally suited for prop trading. But don't forget that you need to choose a good prop firm that sets achievable conditions for you. If the conditions are unachievable, then even the pumping station won't help you meet those conditions. So good luck to you and see you in the next lesson. That's all. Goodbye.